Hello and welcome to the Weekend Investing Daily Bite of 4th of June, the day we have been waiting for since long. And a lot of expectations built on how the outcome of the elections would be. Some met, some did not meet. Really volatile markets, given that there was a huge bump up yesterday and the expectations was continuation of that bump up. Markets cracked today on the fact that expectations of the numbers that were being touted for the ruling party were not met. So the story of the day, of course, is the results. They fall short of expectations and markets adjust. What did the markets do in the last two sessions? On Monday, we saw a huge gap up and closing at above 23,200. On Tuesday, we saw a crackdown to as far as 21,200 or nearabouts, and a recovery towards close at 21,884. So we have been pushed back virtually to the same point where we were at the start of the year. So the entire calendar year gain, you can say, are once again washed out. They have been washed out several times, first in March, April, then in May, and now again in June. So this year, this calendar year, we haven't really gone anywhere. Uh, Portfolios that were started in February, March, April, and were invested in every month are at even right now. Of course, those that were started very recently been read today, but objectively speaking, no major gain has been lost yet. We are still sitting at near 22,000, which is a fine level for Nifty given the current situation in the market. And I think a lot of folks sitting on cash did come into the market when the market cracked. A lot of shorts would have covered. We still don't know the stats for the net shorts at the end of the day, but it does seem like the stability may return somewhere in this ballpark. There may, and today's low actually now becomes very, very crucial because it is also support from the past. So 21,200 now becomes the Lakshman Rekha. If that is breached, then of course we are going down much further. This is the verdict as of 4 p.m. This is a screenshot from ABP Live. I'm showing you this because uh, a lot of folks in the heat of what is happening and why we did not get 350 or 370 or 400. Some key states did not perform the way they were expected to perform, but nevertheless, there is a comfortable majority of 272 and above. There are 19 others, some of which who will help the NDA likely. So the continuation of what has been the governance is not in question. Let's get that very, very clear. If this were to be the final tally, there is still about an hour or two to go, but the continuation is not a question. The only question is that can the market support the current levels regardless of this change? I mean, were we too much into an expectation mode before the election, which get thrashed down, or were we, in a sort of a range since many months pre-election? And you can see that we were pretty much in this 21,800, 2,200 range, going up and down, up and down, up and down. So there isn't really anything to lose from here, in my sense. I mean, worst case scenario, if there is some sort of numbers changing by the end of the day and they come closer to 272 and there is nervousness in the market, then yes, maybe another 5-10% at worst. But I don't think we have anything much more to go. And now the focus will immediately shift on earnings and on the coming budget and how ministries are to be given out, and all those things. So where is the Nifty headed? I think in the very short term, of course, there were huge whiplashes. So on Monday, shorts were crucified, and on Tuesday today, the longs were crucified. So short-term players have been really, their lives have been hijacked in these last 2 days. Hopefully, this support that has come through, this support is where Nifty may consolidate, and then let's see where it goes. Right now, of course, for the very short term, it is still in a downtrend. Other benchmarks also crashed quite remarkably intraday. So Nifty Junior from 71,000 came to nearly 61,000. So a huge crack there, almost 14 to 15% kind of crack, recovered somewhat. and recovered again to the beginnings of where it was in May start. So, maybe a month of gains have been lost. Mid caps, more sharper fall. Um, Again, you are back to where you were in mid-April or so. The previous pivot also is not yet sort of taken out on terms of closing basis. Small caps, if you recall, in the last few sessions when Nifty were making new high, did not make really a closing new high, has been simmering around and has closed exactly at this support point. So small cap is also currently, you can say, in a 14,800 to 16,000 range, and break now below will of course weaken small caps further. Nifty Bank Index made a breakout yesterday, but it just collapsed on itself, as closed lower than this particular range that we are showing here, but very much within this previous major pivot here at 47,000 odd. So just about at that support. Again, a directionless sort of situation may happen for some time. Gold, because INR also dropped from 83 to 83.50, a minor sort of bump up, and in the very short term is looking slightly upwards, although overall the range is 72,600 and 7100. FIIs bought heavily on Monday. So again, as I've been mentioning many times, that FIIs are very, very much directional trend players. Whenever they will find that markets are trending in one direction, they will pile up on that direction. And that's what happened yesterday, I think. It will be interesting to see what today's data is. But yesterday we had both FIIs and DIIs buying in big way, almost 8 or 9,000 crores of buying in cash market. So today could be a sell on news kind of a reaction, and maybe in a few days, you may find that the fact that a third term of a stable government is in place, people may just move on in the market and forget about this current sort of discouragement on the numbers that seem to be existing as of the day. Heat maps, of course, well, largely red except FMCG stocks. So defensive buying today, people getting out of risk on trades and going into defensive. So levers up 6%, Nestle up 3%, Britannia 3%. This was expected, but very surprisingly, ITC down 3.5%. I was expecting ITC also to be up in a big way. Reliance down 7.5%. Very rarely you see this. State Bank down 14.4%. This is a remarkable loss for one day for State Bank of India. HDFC Bank 5.5%, ICICI Bank 7.6%. You can see NTPC Power Grid double digit down. You had Axis Bank 7.5%. Crazy sort of position cutting. Um, Likely that a lot of FII sales have happened in large caps today as well. In the Nifty Next 50, you had deeper cuts. You had Adani stocks losing 20% or even more. You had HAL, BEL, so this entire public sector enterprise block losing big time. You had REC, PFC losing 25% each, such large cap names. DLF losing 12%. ABB down 12%. Tata Power, Vedanta, really, I mean, lot of damage in terms of market cap. I think somewhere near 30 lakh crores or something like that would have gotten lost today after the 14 lakh crores of gain yesterday. DMart, Pidilite, Marico, Kolpal, Godrej, all belonging to the FMCG and retail sector, moving up. Other than that, no place to hide. Sectoral trends, dramatic moves on PSE, PSU banks, energy, metals, infra, commodities, all down 10 to 16%. So very, very sharp cut there. Real estate sector down 9%. Bank Nifty overall down 8%. I mean, 8% on Bank Nifty means that a lot of Bank Nifty traders would have gotten wiped out today. Uh, Nifty 50 itself down 5.9%, autos down 3%. IT, pharma, and FMCG were the ones which were spared as defensive sector stocks. This today's move has ruined, of course, the entire monthly stats of most of the sectors. 3 months also are somewhat in red for several sectors. 12 months have gotten reduced for some sectors. And you have like banking now at 6% for the 12 months. You have You can see that the ones which had fantastic 12-month gains were the ones which lost most heavily today. So people have chosen to book profits and get out, or partially book profits out of stocks where they had the most gains at, which is a very natural tendency for a lot of investors to do. Energy index, again, it's very similar to Nifty, that the crackdown essentially takes us back to where we were in February. So last 4 or 5 months of gain. Actually, it was not a gain. We were still in a range. We have been brought to the bottom of the range once again. The trajectory here on, and especially below today's low, is going to be key going forward. In terms of PSU Bank Index, again, we have been brought back to February mid, uh, canceling out any gains during that period. We should get support at this level. We've had a couple of times we've got support here, and that's where the market stopped here, but we don't know what is coming. Maybe if FIIs really press a sale button here on, maybe we could go lower, but that we will only see in coming days. Similarly, in public sector enterprise stocks, coming back to where we were in February, last 3 4 months of gain that you got, especially from March end, have been taken back. FMCG index came down sharply, but recovered very, very smartly during the day, took support here, and again closed above this range. So FMCG is where you can say that FMCG stocks are not wanting to go down any further from these current levels. That is what the index is showcasing. VIX, after crashing yesterday, has gone up dramatically again today from 19 till 32 and then closing at 27. This needs to cool off, otherwise we will have some trouble in the coming days. Maybe after the final result outcome tomorrow, you may see some cool off on the VIX. USD INR also rallied from around 83 to 83.60. Uh, and this again is at near an all-time high now. Any further fall in the markets is likely to, make it go to a new all-time high. So it does seem like the markets are at their lower support, and all these other charts are at their upper resistances. So ranges are getting tested, and maybe the markets may stay within the range. So this is all I have for today's Daily Bite. I hope you will make sure that volatility on days like this does not deter you from your long-term plan. Equity markets is a place where we have to absorb and sometimes even ignore volatility that comes our way. Uh, and in the longer term, we know the outward benefits that you will get for withstanding these volatile days. Thanks. Bye.